Hello, welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Eden Ovadia, CEO of Finny. Finny is a platform that helps advisors organically grow their business by providing them with detailed data to help them better target their potential ICPs. And with that, here's my interview with Eden. Eden, thanks for taking time today.
Yeah, of course. Super excited to be here.
So, Eden Ovadia of Finny, tell us about Finny.
Yeah, you did the elevator pitch yourself, but I'll give a little bit more color there. Finny is a platform. The quickest way of describing it is the organic growth engine for advisors. So helping you find new clients and then grow share of wallet and retain your clients as well.
Okay, we'll get into how you solved that shortly, but let's talk about the origin story. How did the company come to be?
Yeah, it's a great story. I actually came from the world of tech, so started in AI and machine learning. Then I joined the dark side and went to work in private equity, went Boston Consulting Group. That is where I became obsessed with the wonderful world of wealth management because I was doing a lot of M&A work from the private equity side, doing a lot of the big billion-plus-dollar acquisitions and mergers you see in the news every day. We were doing a lot of the diligence on that. And one of our largest clients came to me and said, "Hey, Eden, we have an organic growth problem." It turned out they had made a whole bunch of very expensive acquisitions. 2022 hit, and all of a sudden, they weren't growing 10 to 15% year over year anymore. And they didn't know why. And when it turned out that most advisors under that firm's umbrella couldn't figure out how to grow beyond just referrals, really just depend on market growth, it was a very scary thought. I think a lot of investors at that point had realized that if you just deploy capital into a business, especially in this industry, it doesn't actually guarantee growth. And there was no formula they could follow to invest this amount of money and then get this outcome out of it. And so that was my first sneak peek into the problem of organic growth.
It is a long-standing problem in this industry. There was a period of time where organic growth was easy because it was basically a green field, right? It was an open field. And you can hear the stories about those days when just holding a seminar was enough to bring in 50 clients and whatever else it was. But as all things happen and as everything happens, sooner or later, the easy low-hanging fruit opportunities disappear and everybody relying on just getting referred to because they're a good guy or good girl in terms of like how they service people, whatever it is you want to say, that slowly goes away. And as the industry matures, suddenly we have to mature with it, including our marketing, which if you look at most benchmark studies, you'll see that most advisors barely spend anything on it. So talk to me about how you crack the nut on organic growth.
Yeah, it just comes down to data. I'm traditionally trained in machine learning, and so are my co-founders. And so we just took a new approach to this somewhat age-old problem that you just alluded to, which is prospecting growth. And we just applied data to it. And so what we're able to do to start is just build a database with about 300 million potential prospects, updated with about 6 billion data points every single day. And so you're in it, I'm in it, and we're tracking things like money motion events, marriage, birth, divorce based off government records, but we're also tracking, and this piece is what I think blows most people's minds, we're tracking intent signals. And so we actually know what people are looking up online, what keywords they're engaging with, how often, and then we're able to triangulate and segment based off of that. That's a huge part of the secret sauce behind Finny.
Okay, so we'll come back in a second, but effectively what you've done is you've helped bring the concept of big data and the surveillance economy. You're bringing the surveillance economy to marketing and to this industry, which may sound negative, but this is the way of the world. This is how Google makes money. This is how all the big boys make money, right?
Exactly. And so this actually, like, what we're doing isn't actually novel. This is the reason why if you're Googling, I don't know, a pair of shoes on a Monday, 3 days later, you're targeted with an ad with a very similar looking pair of shoes. Like, this technology has been out there for a while. We're just the first ones to apply it to financial services.
And this is normal, right? This basically effectively, when solutions come out and people crack the nut on something, what they do is they apply it to a broad market, right? And then what happens is over time, it gets applied more focused to different verticals. So you taken a general broad market solution and applied it to be super focused on a narrow vertical, therefore increasing its relevance and its actual efficacy.
Yeah, and the interesting thing about this industry is that the lifetime value of a client is so high, unlike a lot of other industries, and so it makes it so much more lucrative to apply this type of technology. And so it's not like they're trying to sell candy bars, right? Like, you're selling a relationship for 25 plus years. A lot of what we do beyond just the data is actually matching. My co-founder joked once that it's like Hinge for financial advisors, and that joke may go over some people's heads, but it's like a dating algorithm. We're able to actually predict a match between an advisor and a prospect that they can serve better than anyone else.
Excellent. So Shanna Zuboff wrote a book called Surveillance Capitalism, and that's basically explaining how this all works. Now, moving on, let's talk about the implementation of this. So I am an advisor looking to basically find the best fit prospects How do I filter through all of this big data that you've compiled to find who I should be targeting? And then how do I target them?
So here's the secret. You actually don't have to. Finny will actually do all that work for you. The idea is I'll use Jason as an example. Jason creates an account on Finny. He tells us who he's looking for, who his ideal client is, tells us about himself, what he likes to do for fun on the weekends. And then Finny can actually do the work of going through our entire database and then matching you, Jason, with people we think you'll actually get along with that match your potential niche. So every time you log into Finny, you'll actually see a unique list scored and ranked specifically to you based off profiles that Finny thinks you'll have a high likelihood of getting along with.
But you're not just doing that. You're also taking existing information I have on people that I may have captured, say from a newsletter, whatever else it is, and you're helping me figure out if they're worth me pursuing.
That's right. And so if you have a webinar, you have lists from any dormant lead list you might have stumbled upon in the course of your career, you can upload that into Finny, and then we can tell you, maybe help you find some of those hidden gems or people who it is worth re-engaging with if you haven't spoken to them in a while.
And then in terms of the engagement piece, tell me how you help move the needle on that.
Yeah. Here's the interesting thing, talking about back to the origin story. When we had started building Finny, we said, hey, if we just give them the data, that is solving the problem. And so we'll just give
You
you, we'll
have
tell you
not
everything.
met how lazy advisors work. You have not met how lazy we can be. All right. I still say one day the true marketing, at one point, someone's going to actually market a solution that's no, here's the client. They're literally just going to sign. All you got to do is pay her for her service. That's what
Right.
advisors really want. We want someone who's just done. I don't even need to talk to you. Just buy my services.
Exactly. And so naively, we went out to market and we're like, hey, here's all this amazing data. Here's a list of people you should really reach out to. And turns out our usage was quite bad. And so
Oh,
that's,
work. You gave me work. How can you give me work?
yeah, homework at the end of a long day, right? It's like you're an advisor, you probably, especially if you own your business, you're doing everything. At the end of the long day, all you want to do is start reaching out to prospects, right? And we have built this entire module that actually generates suggested content and schedules it out and sends it out to potential prospects across email, LinkedIn, and even AI voicemails. And so now it's actually truly the advisor can sit back and relax and have Finny go out and prospect for them.
All right. So
Exactly.
that's like how the engine works. Now let's talk about the actual brass taxes, the data. Okay. This is what it comes down to. There's a lot of data out there. How do you sort through the possibilities or the abundance of it to separate the signal from the noise?
That's a great question. I'll actually say that depending on each advisor and what they're looking for, some signal might be noise and vice versa. And so we actually use online reinforcement learning mechanisms, because what's interesting is, Jason, what might be a signal for you or for me. And so, for example, I went to McGill University. I maybe have a high affinity to those that also went to McGill. And so Finny, without he knowing much about me, might not know that I have a higher likelihood of converting prospects who went to my college, because McGill might be a college that has higher alumni affinity. It's over.
Or just affinity for those who live in the States or from Canada and us finding our own, but continue.
Exactly. And so over time, Finny actually learns based off of the interactions on the platform how to better what signals and what data points are more important for every advisor. And so it actually gets better and better at matching the more you go. We'll actually start with a base set of assumptions, and that's based off the profile you create on Finny. And so you'll tell us what's important. Hey, I want to work with people who work in tech and who are maybe looking up alternate investments or stock option planning keywords. And you'll actually build those profiles, but we'll start iterating on them for you. And so after a few months on Finny, you might have a totally different set of assumptions of what's important to you based off what you started with.
Yeah, so that's important because it differentiates us versus a lot of other kind of like paid lead gen,
Yeah,
systems, right? Those really, maybe they do some parsing of who wants to be in what bucket or what kind of prospect you're looking for. But what you're looking for versus what you convert, this is the interesting thing about advisors. They don't often know what their ICP is, and they actually don't know who they actually best serve in a lot of cases.
exactly. And that's one thing that's coming up in our product roadmap. It feels like you're reading off our roadmap, is the ability to actually upload your existing book of
Yep.
business or existing clients. Then we'll actually start identifying and telling you your niches, because you have no idea how many times we onboard an advisor and they're like, I have no idea who I serve best.
I do have an idea as to how often that would happen. In fact, I would be surprised. And what would be more interesting to me will be when you're able to basically show them that who they serve, who they think they serve best is not it, or who they think they serve best and is most profitable is not who is the most profitable. Without data, it's just vibes.
Exactly. Yeah.
Yeah, vibes-based planning. Although there's a bunch of vibe coding planning platforms coming out. When it's the roadmap, how much of the roadmap you want to share with us? So what else are you looking to potentially enrich in terms of this experience?
Yeah, so I touched upon this earlier. Our goal in the elevator pitch is organic growth engine. And organic growth means a lot of things. The most obvious one is that new clients, and that's where we started. And that's what we've gone, I want to say, somewhat of a brand reputation now in the industry for doing a really good job at helping with client acquisition. But there's so much more in growth that we could help with and bringing data to it. So One part is just with your existing clients and growing share of wallet by servicing intent signals and servicing life events or money in motion events of your existing clients. So often, Finny actually knows more about your clients than you do just because it's something we're constantly monitoring. And then the second part of it is retention and encouraging referrals. It's really deepening the client relationship. And so I would think of it as organic growth in three buckets: client acquisition, share of wallet, and retention. And those latter two are the ones we're going to be focusing on in this next phase of growth.
Excellent. So basically, at the end of the day, you're already taking the data you have in one place and you're going to help turn from, again, as you said, acquisition to wallet share, which is, frankly, it's an interesting one because a lot of advisors just assume that they could get the phone call when the money hits. And most of us, many of us do get that largely because, especially if we've been prepping them for that money in motion event and been a part of that. But there are plenty of clients who have smaller clients or larger businesses that have smaller clients that are maybe not serviced as deeply. And it's an opportunity to get ahead of that potentially.
Exactly. And it might not even be some large money in motion event or large liquidity event, but it could be something as simple as they got a recent promotion. There's some event in the news they might have questions about. I mean, if you're not answering their question, someone else is, whether it's ChatGPT or another advisor.
Yes, and whether it's right or wrong is another story altogether.
Exactly.
Gemini 3 seems to be doing pretty good right now. We'll see.
And I don't think it's replacing the role of a financial advisor anytime soon.
It depends on who you talk to. It's amusing because I always find the techno utopianness hilarious. I had more than one, and we were discussing this last time we talked, more than one person I've seen who's created a product largely based on vibe coding and seems to believe in the absolutism of AI. And it's, wait a minute, you're literally going to ChatGPT to ask this question. You're taking your life in your hands, and you're assuming that the person on the other end actually knows how to prompt stuff properly. Which leads to an interesting conversation about, we discussed your efforts in that with having natural language processing and how maybe people aren't ready for that yet. Care to share any of those stories of how you learned from that experience?
Absolutely. And it draws on my earlier story around like when we launched our platform, we had all these ideas or preconceived notions about how the advisor community would adopt the technology. And a lot of them were wrong. One of them was we tried to build the most tech forward, tech advanced platform that took advantage of all the new large language models and all the new capabilities. And so one thing we had built was this natural language search. And so basically what that meant was you can type in plain English, help me find X, Y, and Z, help me find people who went to my high school who now are looking to sell their business, right? The problem is with infinite options, there are infinite errors. We actually realized that with advisors, a lot of them were actually finding it a lot more intuitive to just do a simple drop-down search or criteria search, like a good old-fashioned Booleans, versus having typing in English because it was just confusing what the bounds were and what the LM knew versus not. And so we actually reverted to having a good old-fashioned just drop-down search, and our satisfaction and usage skyrocketed. And so there was a learning there around just don't over-engineer something for the sake of it.
Yeah, but it's just, again, it's the solution search of the problem as opposed to dealing with the actual job to be done. Your Dropbox makes a lot of sense because you categorize the number of jobs to be done. And basically, lo and behold, people are like, oh, this is where I go to do the thing. As opposed to, here's the blank thing that could be anything. And now what do I put in it? I don't even know how to type. The number of studies I've seen around putting people in front of a empty Google box and telling them to do something and they're like, I don't know what to search for. I think too often, especially when you're working on this stuff, you get lost in the weeds of thinking that, oh yeah, everybody can use this functionality. Put it in front of your grandma. See how that works.
Exactly. It's funny you say that. Now, like the threshold for building is, can our parents figure this out on the first try? And is it intuitive enough for our parents to figure out? And if that's the case, I think we did a good job. And if we feel like they would need some handholding, we go back to the drawing board. Here's my crazy take on where all of this new technology and AI is going. I actually think all of these new UIs are going to become obsolete. And like we're all just going to revert to where most people do their work, which is like the inbox or your cell phone. And so you're going to be able to interface with most of these new tools over email, like to Finny.com, and just request a campaign, request prospects, and Finny will respond back in an email. Similarly, you can call Finny and ask it your set of questions or give it an assignment to do it and it'll do it. I actually think that all of these fancy UIs that overcomplicate things are going to be a way of the past.
Yeah. What you're basically saying is that we're going to want to use what we're used to basically communicate. I'm with you on that. I still think that at the end of the day, it always comes down to job to be done. I don't care if you're using AI. I don't care if you're using 2 tin cans and a piece of string. If I hit a button and the job gets done, that's what I care about, right? And so frankly, use whatever it takes to get that job done. And yes, make it familiar. And don't get me wrong, I think that you start thinking about just the ordering of commands verbally to people, there's a lot that can go wrong or get lost in the mix there. I don't know. I think what I tell every company I deal with, please stop thinking about the chat box and start thinking about the button push. That's really what needs to happen. Like, where not only the button push, but where am I when I need to push that button? It shouldn't be this long dashboard of nothing but buttons and actions as if I'm opening Apple shortcuts. It should literally be when I'm looking at this thing, that's what I would need to do, this other thing. And that's where the button should go.
Yeah, I feel like I've heard, and you've probably heard 100 times more than I have, so many tools that claim they'll be able to replace your client servicing associate. Last time I checked, no advisors are spending 4 hours on a dashboard trying to hook to their CSA, right? They're sending them an email, they're calling them, they're giving some instructions, but it's definitely not like they're not having to learn a whole new language or set of tools for that.
No, they don't want to.
Exactly. No matter the cost savings, even if you can make a case for saving X dollars, if it's not more convenient, it might not be worth it.
It's people don't optimize, they satisfice. And right now they satisfice. And short of showing me the actual thing that gets me to not change anything I do, but somehow miraculously saves me money, that's not a thing that people are going to implement. If you literally came out with tomorrow and said, okay, you could let go of your associate and here's this magic box that you would communicate with in the exact same way and we'll do all the work, and it costs you $5,000 to pay for it
Right.
per year. Yeah, that's how most people will listen to, but that ain't going to be how it works. That's not how it works.
For now.
Yeah, for now. But yes, so it's, don't get me wrong, we are on the inevitable path to greater automation and greater standardization, streamlining, because again, said it before, every practice 10, 15 years ago would have needed more staff than they do today. And in 10 to 15 years, they need a lot less staff than they do now. But it's going to take time to get there. And a lot of behavior change is very slow.
So are you going to start seeing more and more just pure solo advisors with no support staff?
That's an interesting question and an interesting diatribe. I'm a believer that you're going to continue to see polarization on both ends. I think the solo advisor who adopts a number of key technologies will have a very easy life and basically, even more than today, be able to push off the need to hire that first body, right? That's it. How big can I get before I have to hire that first associate to take all the stuff that I don't want to do? Those numbers get better. The opposite end of the spectrum is that it is a lot easier for enterprises who have their data together to implement a lot of these big needle moving technologies that basically will mean that advisors working within a large enterprise can potentially harness these, do more complex things faster and better. However, there's all kinds of organizational bottlenecks and human negotiation and bureaucracy and you name it that prevents that implementation from happening slowly. I think what we see from the KITS studies in particular, it's the ones in the middle that basically you get to a certain scale, you have a couple staff members, you get to a certain point and it gets really hard. You haven't crossed over to the enterprise level. We can start taking advantage of all this and you're too big to do things you did the old way. So that's a painful place to be. I think we got to see intensification of that, quite honestly.
I could not agree more. And I think if I can share anecdotally what we're seeing at Finny, we're actually seeing huge adoption in both of those polarized ends. And so we're seeing huge adoption in the smaller solo practices that's called the sub even 150 million of assets or even the 500 million. And then we're seeing adoption in the enterprise. But in this mid-market, what we're seeing is their process of buying technology is similar to the enterprise firms, which is just as slow, just as much compliance and as much red tape, a lot less implementation and a lot less of the
Yeah.
ticket price. And so they're being overlooked by most of these tech companies that are just like, we can either do high velocity sales on one end, we can do the big ticket items on the other end, but you get stuck in the middle.
But you also have, are you large enough to really have specialized and created the resources around that with the bodies you need? When you have a specialized marketing team of a dozen people and you give them a new toy, they can run with it. The one person who's in charge of marketing and doing things the existing way and responsible for continuing things at its current pace, and you give them more work.
Yep.
Yeah, I can see that being just something you can't leverage. Whereas the advisor, sole advisor who can better manage their time and usually was more focused on growth is more likely to work that in. You're convincing one person to change their habit. That's it.
Exactly. And that one person tends to have a lot more of incentive to grow, right? It's like their
That's it.
business.
Right.
You have, I think once you cross maybe what, $1 billion in assets, you start to have more of that specialization of roles and like teams and centralization of teams. And so you're able to like then sell directly to those buyers and those pros too.
Before we wrap up, there's 3 questions I'd like to ask everyone on a positive note. The first one is, if you could change one thing in your company or the industry as a whole, what would it be?
That's a good question. This is more about the industry as a whole. And I think this is something that I see more of as my general cohort of consumers. There's this, amongst the young generation, this thought process that you don't need an advisor ever. And what's an advisor going to do? I think once you start making like financial decisions in your life, you grow up and realize the value that a financial advisor can bring. But I think you're seeing wealth creation events happen younger and younger. and they're not seeing as much education happening at that age. Hence, you're seeing a lot of quite stupid decisions, like financial decisions happening in this young cohort of people who are making a lot of money.
In fairness, those decisions for many times have been rewarded by a bull market that's basically encouraged improper behavior. So it's not surprising, but continue.
Yeah, no. One thing I would change is just the education around needing financial advice. When I tell my peers about the financial advisor industry and like the famous Vanguard Alpha, they're pretty shocked. And so just better education around what a financial advisor can do, because I feel like a lot of people just say, hey, what do I need an advisor for? To pick stocks?
Which is the thing that the advisor shouldn't be doing either.
Exactly.
I hear you. Unfortunately, this industry fails to explain its value proposition properly. And at least the better side of this industry fails to explain its value proposition properly. And we also fail to bring those young people into the nurturing discussions at points that are relevant to them. So we can blame ourselves to a large degree of this. But you know what? Wait until the money gets real and you have to start adulting. When you're like, oh, this is a 6-figure decision now. Maybe I shouldn't just Google this or ChatGPT this.
I'll actually expand this, not even just to the younger generation, but I think like the one thing I would change is helping advisors be more clear about their value proposition at any stage. And like the notion that marketing is a dirty word and sales is a dirty word, when like that's what's keeping the lights on. That's what's enabling you to meet new clients that you can probably serve better. So that's what I would change.
Fair enough. Basically, both sides to better understand the other's value proposition, or the better understand the value proposition, but also be able to explain that. So I got second question. What's been the biggest challenge in the company to where it is today?
I would say trying to overcome the cynicism that comes with building in the growth lead gen prospecting world and not getting bucketed in with some of the legacy players that have overpromised and underdelivered.
The reality is that as long as there's business, there's people who promise you more business. I get flooded with any number of LinkedIn lead gen companies on a weekly basis. I think at some point we all become numb to it. So it makes sense. Last question. What excites you about what it is you're working on and keeps you getting up in the morning to keep on fighting the good fight?
I get to talk to advisors every week that we are fundamentally changing their lives by creating additional streams of income they wouldn't have had before. These are people who typically left large wirehouses, started their own business, took a big risk on themselves, maybe cut their income by a significant amount and are supporting maybe their families too. I was actually on a call with someone earlier and they had struggled for a couple of years, and through Finny, they had brought on a number of clients and gave them the ability to keep building their business versus quitting, closing up shop and giving up. And that is just so awesome.
Fantastic. Eden, thank you so much for your time.
Thank you, Jason.
So that was Eden Ovadia of Finny. Hopefully you enjoyed that podcast. And if you're a U.S. advisor looking for help with organic lead gen, then, well, I think I just gave you a good hint on where to go. As always, if you enjoyed this podcast, please leave a review on Apple Podcasts, SoundCloud, Spotify, and wherever you get your podcasts. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.